You're listening to Energy Insiders, a weekly update on clean energy and climate policy with Renew Economy's editor Giles Parkinson and leading energy analyst David Leach. Energy Insiders is brought to you by Evergen, providing cutting-edge energy management software for battery optimisation, virtual power plants and distributed energy resources. And Pylon, helping solar installers and retailers design high-resolution solar proposals in minutes.
Well, hello and welcome to this latest episode of Energy Insiders. My name is Giles Parkinson. I'm the editor-in-chief and editor-in-large of Renew Economy. And
very much at large to the for this episode, aren't you, Giles?
I knew I wouldn't be able to get to finish my intro. That's right. I'm in Adelaide I have been at the. No, I'm going to finish my intro. And also of the Driven, which is the EV focus, the Driven. And yes, I am at large. I'm in Adelaide. I've been at the Energy Networks Association biannual conference. They only hold it every 2 years, which is curious. And it's actually been pretty interesting. They're sort of talking about the future of networks, and the focus has very much been on households and consumers and how they gather that all together to deliver an affordable product to the consumers. And the consumers must be starting to wondering when that might happen. So the focus has been on flexibility and trust.
Well, I don't know about you, Giles, but I get emails regularly from people who are somewhat self-satisfied and smug who said, well, you know, I bought a great big new battery and some solar panels, and I haven't been taken any electricity from the grid the last month, you know, since I put it in. And I say to them, well, in winter it will be different, but it does make me think there's going to be a lot of those people. And the networks must be thinking, where are all our revenues coming from?
Well, exactly. So they're kind of looking at look, and you've got an interview with the chief growth officer of Fluence, the battery company, first. But at the end of it, I've got an interesting interview with one of the future technology engineers from SAPN, SA Power Networks. They've got this really interesting innovation centre which I visited this week, and they had a display at the conference, and they're just sort of taking through this whole sort of flexibility. Well, they started off with exports, which I think we've all heard about. Now they're talking about sort of flexibility for imports, and then how they actually create tariffs and protocols to make that interesting for consumers. Because consumers, one of the things that really struck me in fact, it was right at the start of the conference, and there was a guy from Endeavour Energy, I can't remember his name, he's very good actually, and he just sort of said, well, when we first got people sort of installing batteries, we asked them why, and we thought, you know, maybe it's for sort of backup power and stuff like that, and they said, no, it's for control. And basically nothing much has changed. And it's because if people want control, and they want to see that control, they've got to have trust in the networks and the retailers to allow them to exercise some control. It's a really interesting question, because basically the argument is that the success of this green energy transition is going to rest really on how we treat consumers, how they feel they're getting a better deal out of the grid. And it was just interesting. The networks were just spending 2 days just thinking and discussing that. So that's a good start. But there's a few things need to happen, such as regulatory changes, finding that message to say that the network's a better value than just having more batteries, and getting that done.
And network equity holders may be taking a bit of an equity haircut to share some of the fact that the networks aren't going to be used as much. But let's talk about that a bit later, Giles, and let's get on with what I suppose people want to hear. You suggested, and I did do an interview with Jeff Monday, who's the Chief Growth Officer of Fluence, and I really enjoyed talking to him.
Let's have a listen.
Jeff Monday, Chief, you're the Chief, I keep getting this wrong, the Development Officer for Fluence, is that right?
Yeah, official title is Chief Growth Officer.
Chief
I'm
Growth,
responsible for Fluence's global marketing and sales teams.
Yes, and I think, amongst your career history, you worked at Apple and a couple of other places, and so I guess quite used to leading and growing business in a major way.
Yeah, I had the opportunity to lead some hyperscale growth teams at Apple in my 20 years there, and then helped actually from scratch built Qualcomm's enterprise and channel teams over the previous 6 years. So excited to bring some of that expertise into the energy industry. only been at Fluence here just 5.5 months so far.
Yes, and I think being a global competitor in the very fast growing and ultra competitive battery industry is something we'll talk a little bit more going forward. I just wanted to talk about the cost down in batteries has been quite a thing at the moment, and part of it's been about I think cell sizes growing from like 300 to 500 amp hours, and then you're getting smaller containers as a result, or more cells more energy into a container or into a battery unit, and this is enabling cost down for customers. Is that the sort of development that you're seeing?
Yeah, I mean, you take a look at where costs are going, they have come down, which is actually pretty exciting because it means that the application for battery energy storage is increasing. That said, as it relates to the specific cells, it's always here at Fluence, we're always kind of looking at the next generation, next set of technology, but balancing that against resiliency and scalability and safety for our customers. And actually the brand new product that we're bringing to Australia, our Smart Stack unit, actually features 305 amp hour cells. But because of the innovative way that we were able to wrap our technology and our hardware and our software and our services together to provide that complete solution, we're able to deliver 10 megawatts in a single block or a single enclosure, which is industry class leading density.
So 10 megawatt hours is quite a lot of capacity. How do you fit that into a single container? Don't you go overweight?
Yeah, great question. Actually, I've got a little model here, so sorry for the theatrics, but yeah, this is our Smart Stack unit, and what's great about it is it arrives in 5 pieces if needed. We've got our 4 battery pods that sit on top, and then we've got our smart skid that sits underneath that houses the chiller, the inverters, and a lot of the core intellectual technology that make up Smart Stack. By moving to this configuration, it allows us to deliver it allows us to deliver Smart Stack in places you can't typically get other BESS or grid scale batteries. And it also means that the trucks can be unpermitted loads so that we can really kind of optimize for our customer sites.
And I think Fluence has quite a good reputation for uptime at its sites and also for getting them built on time. What can you say about that?
Yeah, it's a great question. I mean, we've got very little LD exposure or liquid damage exposure globally because we deliver on our promises, we deliver on our contracts, and we deliver on time. And we're delivering a really high quality product. When you look globally, we've got over 50 gigawatt hours in operation, and we're delivering 30 gigawatt hours globally this year. Of the 50 gigawatt hours that we have in operation, we've got over 98.5% availability for our customers. So we're delivering a high quality product that lasts a long time. And I think we're the only battery company that has been able to go out to its customers and actually extend its LTSAs this year.
Yes, sorry, LTSA, it's
long-term service agreements.
Yes, sorry. There's a lot of acronyms, yeah.
I'm still coming up to speed on some of them myself.
And I think that means that, not everyone is aware that even though these batteries can probably last for you can give it a warranty for 20 years or something like that.
Yeah, our warranties and LTSAs can go out to 20 years. In some instances, we're going beyond that as well.
And can I just ask, what about the C ratings on the batteries? Now, the C rating is the amount of power that a battery can deliver relative to its capacity, or at least that's the way I think about it in my model aeroplanes. How good are these batteries at delivering a lot of power in a hurry if they have to, and then being able to recover well?
Yeah, absolutely. At Fluence, we actually offer a dispatchable power guarantee, and a bit of an industry first there. So I think we're leading class in having on-tap power that's able to dispatch into the grid, and happy to spend some more time talking about that as well.
And then I think the other thing that I've known Fluence for, because it's only been a public company since 2021, and I think its antecedents go back there as a private business, a joint venture before that. But since 2021, really, Fluence owns some pretty good trading software, which I think is, I guess that has to be altered from market to market, but seems to be quite popular here in Australia.
Yeah, it is quite popular in Australia. Yep. So that's our Mosaic trading platform. It's a AI based bidding platform, and as it looks in the market, we're at about 40% of the Australian market is leveraging Mosaic today. So pretty impressive scale. We're taking a lot of those learnings in the Australian market and packaging those up into other trading markets to help kind of scale Mosaic's presence. So very, very excited about the progress that we're making with our digital platform.
And, you know, that 40% would be more than Fluence's share of the installed battery base in Australia.
It is. Mosaic's unique in that it optimizes across multiple assets, right? So just when I speak to that 40% share, because it can optimize a wind asset or a solar asset as well as a battery energy storage asset, it allows us to step into greater scale across the renewable space.
And do other markets, I'm just interested, have similar sorts of needs for auto bidding type strategies? Like a lot of them are like, there's not so many markets with integrated frequency and wind trading, ancillary services, and 5-minute dispatch. I mean, it's quite a complex market, Australia. I don't imagine other markets are all the same.
It is. We've got availability for our Mosaic products in markets like CAISO and ERCOT, where you're able to put to work kind of energy arbitrage to continue to make money. So it's we're constantly evaluating markets relative to fit and continuing to scale our product as our customers see the need.
Yes. Now, I think you're also here. There's more stuff, lots more stuff I'd like to talk about on the battery market, and we'll come back to it. But I think you're here partly because some of your customers want to talk about data centers and the need for batteries in data centers. I mean, I guess in Australia, we don't have, in my opinion, the kind of very large hyperscale data centers that we're seeing being built in the United States, where I saw one 500 megawatt load, 200 megawatts of which is devoted to cooling. But what are the use cases for batteries in data centers?
Yeah, we've been very fortunate here at Fluence to be engaged with all the top hyperscalers as well as the data center developers. And it's been quite interesting. I joined in October, and the conversation started with, can you support BES on a few of our projects? By December, it was, can you have a look at our complete portfolio and let us know if your technology fits? By January, it was, how much of your supply chain can we occupy, right? And what we're seeing is the hyperscalers are continuing to mature their understanding of the unique use cases of battery energy storage in their application. It really comes down to 3 core use cases. The first one is, how can we speed up? How can we kind of speed up power? And that really comes into play by lowering the data center's firm power commitment to the grid, acting as a bit of a peaker to be able to lower that firm power commitment, help them speed through the interconnection queue. The second,
so just expand on that a little bit. When you say firm power, I mean they normally draw demand. So you would be talking about it as reducing the demand on the grid, or being able to supply power back to the grid on, or how are you actually demand response? How are you thinking about that?
Yeah, reducing. I would frame it as reducing the draw on the grid during peak times, right? So
demand response,
a peak shaver. Yeah.
Yeah, acting as a peak shaver. So the battery runs the data center for that period where the market doesn't want you to be drawing from it.
That's exactly right. Second use case being all around power bridging and backup. And when you look inside a use case, the UPS architecture has kind of grown up organically a bit, and it's pretty wildly inefficient when you start to look at efficiency. So by having a Fluence battery on site, you can start to replace some of that UPS and leverage cold start backup. And in addition to the UPS, we're also starting to see that our batteries are starting to replace diesel gensets within the data center.
because the diesel gensets, and particularly gas ones, or reciprocating engines or whatever, I mean, they're slow. Diesel's not quite so bad, but reciprocating engines, I mean, they take a long time to start up, a long time to slow down. They're not necessarily that efficient. I mean, maybe the 5-minute startup's okay for some of them, but it's a lot of equipment, and very expensive to run as well, compared to a battery that can operate at the same and runs on the same technology as the data center itself. I mean, it just has to integrate a lot more naturally with it, doesn't it?
Yeah, you said it quite well. I think the other piece that's quite interesting in the backdrop is a lot of these hyperscalers have carbon neutral commitments, and by putting big diesel gen sets, it's actually going the other way against their goals. And when you dig in and you start to talk to these data center operators, it's not just the capex cost of a diesel gen set; it's the supply chain. They're getting harder and harder to come by, as well as once you put them in, they often sit and they just hibernate. They actually don't get used all that often. And the OpEx for a single diesel gen set inside of a typical data center is about $4 million a year. You could be reapplying that into an asset that gives you a lot more agility, right? We talked about the speed to power that BESS enables. We talked about the backup, and you were talking a little bit about the load frequency as well.
Well,
and
let's
that's
talk
where that
about that.
third
Yes,
use case
yeah,
comes in.
because for our audience, I think the way I understand it is that when data centers are training, the training happens on lots and lots of different processes all at once that are all communications. And within a data center, a huge amount of the investment is on the communication infrastructure between the processes, so they can all coordinate what they're doing. But from time to time, for one reason or another, and it may be for just a very brief period of time, they all have to stop and get their coordination going. And all of a sudden, this data center that might be drawing 100, or in a bigger case, even 300, 400, 500 megawatts, has suddenly got to stop instantly. And that's an instantaneous drop in demand from the grid that can throw the grid frequency off. And a battery seems very well placed to deal with those kind of issues as well.
You said it best. I think that third use case is really to be a shock absorber, right? Of what we're seeing, or the behavior that we're seeing from not only the data center, but the GPU itself, right? We're finding that these data centers can flex anywhere between 100% of their nameplate power down to as little as 20% in a matter of milliseconds. And so you need a technology that can respond at that rate and be agile at that rate. I can't imagine a diesel genset trying to flex in that nature. It wouldn't be very productive over time, and probably can't absorb the load at a rate that it would truly absorb that shock back to the grid.
And so I guess data centers then need to be conscious of their communications, essentially the fiber optics cable. You can always, there's a lot of it around the place, and it's much cheaper to install than electricity transmission. So in the end, the other thing about data centers is that the traditional data centers, like cloud providers, essentially the way I think of them, where you put your filing cabinets, your digital filing cabinets, that kind of is a labor cost business, because the actual physical labor costs are more important than the energy costs. But as you move to more and more capacity utilization, and then the energy cost becomes very dominant, and the location of locating close to energy becomes a bigger driver of the whole thing.
Absolutely, and this is ultimately the bridge that got me into the energy space, right? I was at Qualcomm at the time, and we had one of the hyperscaler CEOs come down, and we were doing our strategic planning session. And the thesis of this CEO was they could take a portion of the data center load that was happening at the data center and bring it on device. Qualcomm has 4 billion devices on the planet, and they all have little AI processors. And so the thesis was, hey, I'm going to take 10% of that, I'm going to put it on device. It'll take off the data center load. And I challenged, it's a lot of work, right? A lot of work to get that done. And the CEO said, well, in about 5 to 7 years, based on our modeling, we run out of power, both for kind of traditional data center loads and AI data center loads. And that's where you step back and you look and you realize very quickly that this race for AI and super intelligence is really a race for energy infrastructure right now. I think shortly behind that, to your point, it's going to be a race for communications infrastructure, and you're going to need all three to be able to truly meet the demand of superintelligence.
I remember when the internet first started, there was one famous data scientist who said there'd never be enough fiber optic cable, and he had to eat his hat. So I'm, as someone who's been in the prediction business, for forecasting business, it's not a business where you should be too confident in what you think. And you know, when you talk about a race, and I've seen them in the LNG industry in Australia, you need to remember that there are losers in races as well as winners. Only one guy ends up coming first, and three guys end up on the podium, and the other guys go home, and their investors probably lose a lot of money. And we probably don't have the time to talk about that I'd like to at the moment, but I did just want to talk a little bit about, ask about Fluence, because it is a tough race in that you are actually in with to be a battery supplier. And the competition's tough. And I mean, when I look at Fluence's overall profitability, it seems like there's a lot of this been a challenge the whole time to get to a net profit. I mean, once companies start talking about gross margin, don't even want to talk about EBITDA. That's, you know what I mean? It's like, I'd like them to be talking about how their return on capital and stuff. And there's a lot of R&D. I think something like US 80 million a year. It's quite a lot to be spending. How do you see the future for Fluence in those terms?
Yeah, it's obvious you've you combed through our financials, and I think as you comb through those financials, you'll see that we're listen to the last couple earnings calls. We're in actually incredible position in that we've got record backlog as our business continues to accelerate. We've got a very strong cash position relative to the needs of our business, and yes, we've been really prioritizing driving innovation and leading innovation in the market, which has led to our Smart Stack platform that is leading on a number of factors, right? It's got a bleeding edge cybersecurity, which is helping us access and put us in a unique position to access the data center market. It's a platform that's driving leading edge density, but more than that, it's a product platform. And in that product platform, it's now going to allow us to have really efficient R&D investments going forward so that we can scale within the platform rather than having to reinvent that every few years as our competition has.
Yes, because I looked at that just to harp back to those 300 versus 500 amp hour cells, and I did ask Claude to do some research on why American factories weren't as efficient as Chinese factories. And China's it's the same as the car industry. You know, they build all these factories within 4 years, and they move right down a learning curve, and they reduce their waste. Apparently, waste, you can, you know, in a Tesla place might be 40% compared to, 10% in a good Chinese factory. So once you've got a good platform, I think what I'm saying here, your ability to just scale it up and outwards should hopefully bring down costs incrementally. But having said that, if you look at solar and wind and batteries, it's someone always seems to have a new mousetrap, don't they?
Yeah, and I think it'll help drive that revenue efficiency that you were asking about as well.
And so when we come to the Australian market, do you see much prospects? I mean, Fluence, I think, in its quarterly mentioned Australia when it didn't in the December quarterly in terms of the new orders. You've seen much growth, and you've seen the Australian market overall likely to grow for you and just within itself over the next couple of years?
I think the future is incredibly bright here, right? We're here at the Energy Store Summit in Sydney and had the opportunity to meet with, close to 35 customers. And I can tell you that the demand for our product is strong. The innovation that we're driving in the market is unique. And what's really kind of setting us apart and really driving customer consideration is that within that same Smart Stack platform, we're able to be agile in the duration that we're able to deliver, right? We can deliver a 2-hour product all the way up to an 8-hour product. And I think a lot of people were thinking you'd have to get to some exotic battery chemistry to be able to deliver long duration energy storage. And it turns out that LFP and our 300 amp hour cells are quite efficient at delivering an 8-hour product for our customers.
Yes, and in fact, the inverter doesn't really care whether it's running for 1 hour or 4 hours, more or less. It's only the cell count in one sense that actually changes, isn't it, as duration goes up? And that's what lets the unit costs come down, isn't it?
Absolutely. And, as we move from 2 hours to 8 hours, we can actually pull inverters out of the product itself and make it far more efficient.
That's right. And then we were talking a little bit about another thing that's been going on is hybrids in Australia. And I think I came to the conclusion that it's mainly the sharing of the transmission that's more important than the DC to DC savings, which are only a couple of percent really. And then the other thing I think that's going on in Australia is we're trying to get our batteries, we're moving to an inverter based grid. And increasingly, it seems to me that the technology is there with batteries that you're really not going to need a lot of rotating mass for inertia at all. How does Australia stack up on that kind of capability versus what's going on you see in other markets?
It's a great question. I'll answer the hybrid question first. I 100% agree with you. I think making the most of your connection by bringing batteries plus kind of renewables together under one connection asset is the best way to optimize your IRR, your TCL, your return on investment, however you want to call it. And so, rich opportunity. We see the hybrid projects continuing to accelerate in our pipeline. And then getting to grid forming, we're incredibly excited about what we're learning here in the Australian market and being a leader really in this Australian market. We've invested in our grid forming team as we see this as kind of the future. I can tell you in my Australian pipeline, I don't know if I have a single grid following application. I don't think it pencils at this point. And so I think you're going to see most projects connecting the grid are going to be grid forming going forward. And we're taking the key learnings here and scaling that as we're starting to see more and more in the US and the UK and Germany becoming grid forming applications as well.
I'd like to ask some more questions. Just on the cost side of things, I think cell prices, China changes policy and maybe the cell prices will keep coming down. But if I look in computer land, I see that the costs of RAM and stuff, because of the huge demand, are going up. Then I think the costs of labor in data centers, people who understand LLMs or can build the NVIDIA processor networks, the Blackwells and Hoppers and whatever the heck they are. How are you seeing the labor cost environment within the battery industry?
Yeah, I mean, I would say for us, we're consistently being able to hedge against that relative to the diversity of our supply chain, right? And it actually started around COVID. We found that we weren't able to get our customers product. And so we made an intentional investment to diversify our supply chain, both by providing a complete U.S. domestic supply chain, all the way even producing the battery cells in the U.S. itself, but also looking at a diversified supply chain out in both inside and outside of China. And so that gives us multiple options to ensure that we can continue to deliver a cost competitive product to our customers.
That's right. And I guess here in Australia, you also need the grid engineers and people. They seem to be an asset in short supply, but I won't ask you about that. There'll be other opportunities to ask other people. Jeff, you've been very kind with your time, kinder than our audience realizes. Is there anything else you'd like to leave the audience with?
I think we're incredibly excited about the Australian market. We touched on it, right? It's a great market. I think it's a market in need of quality, long-lasting, high-producing battery energy storage to truly unlock all the renewable assets that are sitting here, and then also answer the call of data centers that will inevitably moving closer to the centers of population here in Australia. So couldn't be happier about where we're headed, and really excited about this space going forward.
Jeff, so thanks for sharing your insights. It's great to hear from someone who's on the battle front, if I might say so, in what's the fastest moving sector of the energy industry just at the moment.
Yeah, David, thank you so much for your time. Really appreciate it.
G'day, Alex Carey here. The GoodWe ESA all-in-one home storage solution is here, and it's a game changer. It's packed with market-leading features, full home backup, and 6-level battery protection. With up to 48 kilowatt hours in a single stack, the ESA is a breeze to install with no gateway needed. The Goodwe ESA series is available now and priced to cover the 2026 drop in the rebate. Visit goodwe.com.au for more information.
And that was Jeff Monday from Fluence talking to David Leach. David, some interesting things there. Data centers was the subject of conversation at the EN 26 conference there, and no real easy answers. But it's interesting that sort of Fluence believe that they can play a key role in managing.
You and I are not cynical, but we always imagine that a cynic would say something. And the question is the cynic's question is, are data centers this year's hydrogen?
Well, it's a big wonder, actually. Yes. Yeah. There was one data center guy actually talking at the start of the conference. I just thought, Jesus, mate. He was sort of threatening, saying, "Oh, the world wants data centers, and we can bring them to you, but you better give us approval really quickly, or we're going to go somewhere else." And I just sitting there in the front row, just going, "I actually think you should go somewhere else if you don't mind."
So I think there is a lot of that comment of mine was far too harsh. There clearly is a huge amount of investment in data centers. I've been at pains to try and identify it, and I think there's somewhere between $750 million and $1,000 a trillion of US investment into data centers in calendar 2026.
Yeah,
which that's a lot more than we ever put into hydrogen.
Yeah, I've got this really interesting statistic which I can dig up here. This is interesting. This is the rate of technology change. Go back to 2008. The IBM Roadrunner was built for $150 million. This is in 2008. Took up 296 racks, 5,160 square meters, required 2.3 megawatts of peak demand, and was only in operation for 5 years because it got run out by new technology. In 2026, the NVIDIA DGX Spark had cost $4,700, which was a $32,000 improvement, used just 0.225 meters squared. That's a 25,000-fold improvement, and only used 240 watts at peak, which is a 1 million-fold improvement. Now that is in 15 years, and I don't think technology is going to slow down. So the idea.
Well, the relevant point about all that, Giles, is that for all this, we're not doing a data center podcast here, but I think anyone who follows this stuff and at all will understand that RAM prices, random access memory chips prices for just plain basic memory are up 50% this year. So this is standard when an industry goes into high growth. The cost of it all goes up very quickly.
It does. So that drives efficiencies, David, as you well know.
Yes. And anyhow, we won't talk about data centers too much more. But the other point I wanted to make about it, was about in what you said, is that they didn't last that long. They were economically obsolescent within 5 years. So if you're an investor putting this US $1 trillion in, an awful lot of it's been financed by credit. And there's some incredibly, if you look at Elon Musk's XAI, there's some numbers that would cause me never to invest in it or go within 100,000 kilometers of it if I could avoid it. But those chips are all going to be obsolete fairly quickly. And that's where a lot of the investment actually is. It's not in the land and buildings and the power supplies and the transmission lines. That part's okay. It's in all the chips, the racks of chips that'll have to be taken out a few years down the track. But let's get back to what else is going on. Amongst the climate change news this week, I suppose, was the ACCR, which is the Australian Centre for Corporate Responsibility, that takes a look at what big companies are doing. And they ran a law case where they said that Santos's disclosure in 2021 claiming that gas was clean energy was a little bit misleading, considering that, in my words, gas is the third largest fossil fuel contributor to global warming. And the court decided against the ACCR, but the news this week is that the ACCR is appealing that decision which I think is a jolly good thing. Doesn't mean they'll win the appeal.
Absolutely, yes. And a former reporter for Renew Economy, Michael Mazengard, is heavily involved in that. So go, Michael.
Equally, I suppose more important to consumers this week was the AER announced today, the Australian Energy Regulator, that the default market offer is going to fall by a high single-digit percentage, I think, in southern Queensland and in New South Wales, and by 1 or 2% in South Australia. The reasons behind this are always going to be a little bit hard to follow for everyone, but it means that electricity prices are going down versus inflation, and that's certainly a good thing. And it just reinforces the point I try to make quite regularly, that for all the talk that you get from people about how much electricity prices have increased over the past decade, as measured by the Australian Bureau of Statistics, and after backing out the subsidies that the federal government, and in some cases state governments, have supplied, electricity prices have gone up by about the rate of inflation, or maybe just a touch more. By contrast, insurance has gone up by about 80% more than inflation. So it remains the fact that it's in consumers' best interests to decarbonise the economy very quickly.
Yeah, absolutely. And just sort of underline a few other points that AER made is very similar to what the Victoria regulator said a week ago. Basically, it's the increase in wind and solar which is driving down wholesale prices. There is a risk that ongoing coal outages, because the aging coal generators, may reverse that, because there's going to cause scarcity in the market. And one of the more interesting presentations, at least in the second day of the EN26 conference, came from Paul Simshauser, who's been on this podcast just recently, former head of Powerlink, now head of Iberdrola Australia, also works at Griffith University with Tim Nelson. Last year, he published a very important study just pointing out that if we hadn't made the transition to wind and solar, we'd be paying 50% more higher wholesale prices. And he also warned that the ongoing delays in the closure of coal-fired power stations is going to cause prices to be higher than they otherwise would be, not lower, as some people try to pretend.
Every week, Giles, you and I ask on this podcast, where is the FID on a big new wind farm in New South Wales? The gigawatts of wind that we ultimately have to be built. And bloody soon. Oh, did I say something?
Yes, no, you did, and that's perfectly acceptable, David. And Paul actually just pointed that out and just said and I can't remember the exact graph, but basically how far are we behind in this transition to renewables getting to 82%? And as you and I well know, it's basically the lack of wind being built. And
meanwhile, what we are seeing, as everyone else says, and someone like Dave points out, is an increase in the batteries coming online, utility, and we've already mentioned the behind-the-meter batteries that are making so many individual consumers very happy with what they've done, and I think Chris Bowen's going to get a lot of credit for that. But the utility batteries, are now up to 3.8 gigawatts, I think, is the maximum discharge in any 5 minutes of the NEM. And the amount of capacity coming online continues to grow. At the moment, I think its impact is mainly on prices. And as we move into shoulder season and spot electricity prices start to grow, then I think we'll see batteries operating more and more.
Yeah. And I actually published a couple of graphs from Jay Thomas, the head of energy policy in WA, who has also been on this podcast, and just talking about 3 years ago, there were no big batteries in the WA grid. Now there are quite a lot, including the two biggest operating batteries in Australia at the moment. And that's basically eliminated the minimum price during the day because, or the minimum, the minimum price, because they're charging, and that's sort of keeping prices might be negative, but not so negative. And it's also reducing the amount of maximum peak pricing that they have in the WA grid. Now, the WA grid is slightly different because they have a capacity payment, so the prices aren't quite as volatile, but it's really interesting to see.
And it's just building up over the last 12 months. I mean, you can clearly, the point is this is, 3.5 gigawatts. How long would it take you to ask the Queensland government how long it's going to take after they've finished recovering from this next cyclone that's just about to hit them, how long it's going to take them to build their couple of gas generators, that they want to build. Anyway, sorry, Josh, you were going to say?
I was going to say that we've been talking about whole-sale prices, but the other big part of the electricity bill is network. And so just to get back to the networks, which we started talking about, and my attendance here and 2 days of conference and 3 days here actually, because looking around at different things. Anyway, look, I was fascinated by these screens, these live screens, these dynamic screens, which showed the how flexible exports and flexible imports work, just both on a household level, a street level, and a grid level. And I think this is really interesting. This is this whole sort of network push into sort of being a DSO, a distributed system operator. They're selling this idea that this is the way to bring it all together and to bring benefits to consumers. We shall wait and see. But the technology is interesting. The idea is really interesting. And I talked to Adam Cameron. He's one of the engineers at the SA Power Networks Future Innovation Hub. And this is what we had to say. Hi, it's Giles Parkinson from Renew Economy. I'm at EN26 in Adelaide. That's the conference held by the Energy Networks Association every 2 years to discuss the latest developments in grid and network technology and policy and things like that. And joining me is Adam Cameron from SA Power Networks. You're the future grid engineer?
That's right.
Yeah, well, look, thanks for joining the podcast. This is a bit of an unusual one because this is probably one of the most interesting displays that I've seen at this conference, and the whole... Is that okay? Yeah, okay, sorry. Yeah, I'll start that sentence again. Yeah, this has been one of the interesting displays at the conference, and the whole theme has been about flexibility in the home. South Australia is quite unusual because it is the first grid in the world that's going to reach 100% renewables. It's all reaching, Adam, 100% solar penetration, rooftop solar penetration, like every second day, rooftop solar.
Any sunny day.
Any sunny day,
we're
rooftop solar, 3.2 gigawatts of rooftop solar, 1.5 gigawatts of average demand, 48% solar penetration, increasing number of batteries. And that just makes the home the center of this renewable energy transition. I'm going to get Adam to walk me through. This comes from the SAPN Innovation Centre, and there's 3 screens that tells us the story about what the future of the grid looks like. And Adam, just tell me about what you're sort of looking at in the Innovation Centre before we have a look at the screens.
Yeah, so at the SAPN Innovation Centre, we design and run projects that we think are going to benefit the grid and the system and our customers in the future by using renewable energy and new technology in a really smart way.
Yep.
And we've brought part of our system here to display at the EN26 conference. And all of this is about how we think we're going to transition from being just a network operator to being a DSO, a distribution system operator.
Which is about orchestrating all these assets for the homes and for the grid, but also making it worthwhile for the homes. Because there's that big issue of trust, which has been another big theme of this conference about, can you trust the network to do the right thing? And I think you guys are trying to demonstrate that you can.
Yeah, we think this kind of technology will help us run the system in a really most efficient way, which means the most valuable and least cost outcome for our customers.
So let's have a look at the detail and these screens individually, because I think it just tells a really interesting story about where we're heading for the grid. So Adam, tell me about this first screen, and just remember a lot of our listeners are actually on audio, so not actually got the TV, so you're gonna have to make it really clear.
Fantastic. So what I'm looking at here is a view of a future smart electric home where all of our key resources for generating and using energy have their own line in this graph that can show us what that thing's doing. Is it pulling power? Is it generating power? And how much?
Okay. So you've got solar, you've got battery, you've got the electric vehicle, you've got the air conditioner, you've got the hot water system, and you've got the inflexible load.
That's right.
Yes. What's the inflexible load?
That's things like your TV and your stove and your computers.
Things then that you must not switch off.
Yes.
If you
Well,
need to.
we couldn't even do that.
Okay. So what are we seeing at the moment?
So right now we're like a normal situation on a sunny day. We've got a good sized solar system on this house generating 10 kilowatts. And we've got a car plugged in, and maybe it's a bit hot, so our aircon's running, and maybe the TV's on. It's like it's a Saturday afternoon, and people are home. People are home, And we're still generating 5 kilowatts more than we need, so that's exporting to your grid, and that's great. Right. So this is just a normal situation. But this really shows us like how the upper and lower limits of a home's capacity look in normal situations. Like there's a maximum limit of load that we can take and a minimum limit of export that we can take. And normally that's quite a static concept.
Yep.
But in this situation, that can be dynamic. It's a dynamic operating envelope.
So why don't you just take us into the situation where exports need to be adjusted?
Yep, fantastic. So I'll run a scenario on this screen here. And what we're seeing here is a situation like a mild spring sunny day. And let's say we're out of the house, no one's home, but the sun's still shining and our solar's still on. So we've got our full 10 kilowatts of capacity, cranking out green energy, great. And only the fridge is on, right? Just background load, not much load. So we're at our full export capacity of 10 kilowatts. And that's great for the home, but when everyone does that at once, the grid can be very much under stress. And if we look to the middle, maybe, we can see what that looks like, right?
Okay, and this is the second. So this is actually showing the whole network rather than just the home.
Yeah. So this middle screen is looking at what the situation right now looks like from the network perspective. So we've got many homes on this street here, and this home we just saw is one of these homes, right? But if everyone's exporting at the same time, doing roughly the same thing, then we can often get in a situation where our network is overloaded in the reverse direction. And that's what this graph is showing here. If we've got 50 kilowatts on this street and we're at minus 80, then we're obviously in a problem situation there. And we can also see the volts running high.
Okay, so you've got a warning sign here from the voltage. So you've got 80 kilowatts going the other direction down the lines. You've got a warning sign here. What do you do? Because this is the ability to have sort of flexible controls over the home. So what's happening? What's going to happen?
So what we're going to do is run an export limit on the solar in this area. And that is going to reduce the exports just by a little bit to bring everyone back into line with the network's capacity. Now, I do this instead of building out the network. Like I could upgrade this transformer,
yes,
but that's going to be much more expensive.
Because originally South Australia had this thing where basically there were strict static limits on exports, and you've decided that you have flexible exports now, so then you can actually dial them down on the rare occasions that you need to in exchange for being able to export at whatever they want to do for the rest of the time.
That's right.
Yep.
So
because the grid's got a lot of capacity, but it's just those certain times when it needs to be.
That's right. This is all about managing those critical moments.
Yes.
The lowest load and the highest generation moments in time, which are pretty rare.
Yep.
So it's a bit wasteful to upgrade this transformer and spend a lot of money across the network just to manage those really, really rare peak moments.
Okay. So what's going to happen here to all these users?
If I've got the control panel in front of me, I can run an export limit, and the export limit is going to change from 10 to 8.
Yes.
And everyone's going to come back in line.
Yes.
And that across the local area is slowly going to bring our network capacity back to the rating of the system. And it's going to lower our voltage to a more healthy level.
Okay. And so basically what's happening to that solar then? It's just being curtailed. It's just being...
So we use smart communications from our servers to inverters over the internet.
Yep.
And that inverter knows how to follow its limit. It's going to reduce its power set point just to generate just a little bit less.
Yeah.
And just make sure that excess power isn't...
Did you do things like sort of increase load and switch on things in the home as well?
That's right. You definitely could, right?
Yes.
So all we're talking about doing here is limiting export. You're not limiting your own generation. So if you've got your own load or a battery, then you can go hard. That's no worries.
And the interesting thing here is that 90% of new solar systems in South Australia have this flexible export capacity because people would like to have more solar and just deal with these limits when needed. The next step in this is about imports.
That's right.
And having flexible imports, which controls not just your amount of solar that you're exporting, but the amount of load that you might be using at home.
That's right.
Tell us about that, and I think that takes us to the next screen, doesn't it?
That's right, yes. Well, I'll look at this screen and then that screen, but if we fast forward a few years, now that we've got a good solution for managing solar, we're thinking about what's next, and we see, the growth of electric vehicles on the horizon and electrification of gas on the horizon, and we would like to turn that from a challenge into an opportunity for us, right? So what I mean by that is if we run a situation that's kind of the opposite, right? A maximum demand scenario where everyone's cranking their loads. Maybe they've got EVs running.
Yes,
it's hot.
We're now seeing the numbers up on the screen. Instead of exporting 10 kilowatts, there's some of them importing 15 kilowatts, and some of them importing 11. So some of them presumably got electric vehicles going, or they've got hot water going, and they're watching Million TVs or something.
That's right. I don't know what they're doing, but they're doing
something.
They're doing something.
Yes.
Back on our home view, we can see what our home of interest is doing. But at the community level, this means that we've got a problem in the load direction, right? We've got a transformer that's overloaded, and volts are getting low. So, and if we look at the right-hand TV, this trickles up to the system, right? If everyone's doing this across a state, that translates into system level risks. That means a imbalance of demand and supply that can lower the frequency, and we can be at the higher end of our system's capacity.
So you're importing from the another grid now, and you're probably and the prices have gone higher.
That's right.
So,
Now the wholesale market is stressed. Prices are high.
Yep.
Now, what I'd like to show you is how we can use distributed solutions to solve not only the local challenge, but the system challenge too.
Okay, this is flexible imports, guys. That's about to happen. What's going to happen
That's right.
here?
So on my control panel, I'm going to run an import limit, and maybe I'll take you right back to the home level.
Yes.
See what this looks like at the home.
I've just seen on the street the import limits have been cut right back. And let's have a look at this home.
Yep.
What's happened
So
here?
in our home of interest, this home has received an import limit from us.
Yes.
Using the same system that we use for exports, but now it's just got another limit, and it's paused the EV charging to shed that load out of the critical moment.
So that's the first thing that goes, EV
That's right.
charging. Yeah.
That's right. We've got smarts at the home now that can make a decision. The home has seen a limit come in, and the net load was over that limit, so it gets to make a call of how to meet that limit.
Yep.
Right. So we can discharge our battery. We can also reduce the load on the air conditioner. Things like that are possible.
And that's just by adjusting at 1 degree or 2 degrees.
That's right. You can see here, we've got the temperature. It was set at 21. Let's say we can set it at 23 instead and save a kilowatt of load.
Okay.
That's great. And that's useful to the customer and to us. And maybe we can pause the heating of the hot water tank just for now because we're in a critical time.
Okay. So it's basically sort of discretionary stuff.
Yeah.
So people are seeing their loads going down. The electric vehicle's no longer charging. The air conditioner has been moved on about a degree or so. There's no hot water. What's in it for the household, though, to have these loads change remotely?
Yeah, that's a great question. So to do this, we would love to reward customers for this flexibility. And this is what we're seeing on this little chart in the corner here, this value stack. What I'm showing here for the listeners is a vertical stack of all the value that a customer's getting. And what we've just done by doing this load flexibility is add another chunk to our value stack. We've got, the value of having solar and battery and electric appliances. This is another level. This is the value.
Right.
This is what we call network support value, right?
And you're running a trial now, I think, with some retailers to still try and working out what the tariffs are that the right setting. So basically, you'll move from this very static sort of situation where people put in solar, you have to put limits in because the grid's not very flexible or dynamic. You found ways now to be flexible with the imports. The next stage, exports, sorry.
Yep.
The next stage is to be flexible with the imports.
That's right.
So you've basically got the homes, you're allowing them to lead that sort of charge towards 100% renewables.
Yep.
Because they kind of like the main player in this whole game, really.
That's right. And they get to benefit from it.
And they get to benefit
from it financially.
Yeah.
Not only by paying less in peak periods, but also getting payments directly from us because they're supporting us in managing the grid.
And there's this issue of control, though. So, but ultimately, even in this situation, a consumer would get the final say, saying, don't you switch off my EV, I'll keep that going. But then there's going to be financial incentives for them to either let you do that or to not charge so much at those critical times because the price is going to be high and they might be getting paid not to do something.
That's exactly right. So what's really important in all this is that firstly, it's optional, it's opt-in, and secondly, people can opt out at any time. So we think that in a situation like this where this is happening in real life, we always give people the ability to opt out and say no, today I need my car charged, today I really want my air conditioner. And we say, no worries, that's fine. But the value is tied to the flexibility. So it's a choice of the customer if they want to participate or not.
So the technologies are there, the idea is there.
Yep.
I guess what you need now is the right sort of tariff situation, the right regulatory controls, and then this can become a reality sometime in the next couple of years.
That's right. Right now we're testing it at a small scale in a trial called Energy Masters.
Yep.
And the intention of that is that it's a first of its kind, but scales up rapidly from here. Okay. And we use this trial to test how to do it and then work out what needs to change to make this a thing at scale.
Okay. Well, Ed, thank you very much for joining us and running us through this exciting new technology.
Yes. Pleasure, Ross. Thank you.
And that was Adam Cameron from the SA Power Network. So we've actually taken a video of this. So if you found it hard to follow in the audio, because we're kind of looking at the screen, we're trying to describe what was before us. We will be posting a video of that, which might make it a bit clearer. I actually think it's really interesting idea. As I said at the start of the podcast, I think South Australia is at the cutting edge here. If you think about what South Australia is up to and doing, next year in 2027, it intends, or it has a legislative target of reaching 100% net renewables. This will be the first gigawatt scale grid in the world that will reach that target, and it's doing it with wind and solar and batteries. No hydro, no geothermal, no pumped hydro.
They do have the backup, transmission connection. We shouldn't ignore that.
Well, they're not an isolated grid, but still.
No, and next year they'll have a second line coming in, of course, and that'll make some more changes. That's
the only way. That's the only way they're going to get there, with that second line. But still, it was really interesting.
It's not to underestimate what South Australia has done, and it's the most wonderful experiment. And Malcolm Turnbull was so correct when he called it a great experiment, and it's an experiment that proves everything that we've already hoped and expected. Look, there's so much going on, but I think ultimately the AEMC needs to look much harder into itself as to how the whole thing should be structured. There remains a completely fundamental problem for the networks, is that their customers are the retailers and, as I said a couple of times, somewhat jokingly, but not that, the regulator. That's their customers, and they're entitled to an absolutely fixed rate of revenue. And so all they're thinking of is of different ways to slice the cake. It's a question of which customer pays and whether they pay. It's like Roger the Lodger. You can pay on the way in and you can pay on the way out again.
Yeah, look, I think what they're proposing now is slightly different, and I think they're a bit frustrated about the way that we're sort of vertically integrated in Australia. And a lot of them did actually point to what's happening in the UK. In the UK, the regulators there take a more active role in sort of setting policy and responding to government policy targets. So they go, okay, you got to reach X by 2030 or 2035. What do we need to do? And they say, this is what we need to do. And they go out and say, okay, well, who can do this for the lowest cost? And the networks come out and make all their proposals, and they go, yes, yes, yes. In Australia, you've got networks kind of saying, okay, right, these technologies are coming, we've got to be there. Let's try and do this, invest in this. And you get the regulator going, oh no, oh no, oh no, and just basically being reactive rather than proactive. And they basically want a change in the way this is done. So, because networks, you talk about their equity, they actually think that there's money in them. If they can actually sort of get incentives for actually reducing the investment in the network and sharing those incentives with the customers, then everyone wins. Now, quite how that gets pulled off in the end, I don't know, but it's certainly going to need a change of policy and regulatory thinking.
Everyone can only win when you have productivity. Growth, right? Ultimately, that's the way that everyone wins. You grow the revenue and spread it around, or for a fixed amount of total revenue, then you have productivity growth. You lower the overall costs. I mean, that's ultimately the only way. And if networks want to have a bigger share of everything, then I think they have to accept more risk. The point at the moment overall is they get a fixed amount of revenue. It doesn't really matter what happens to the network. They're entitled to all that revenue, and their costs are all allowed for as well, provided they stick in the cost budget. They have a debt, essentially, investment. So I do think that we all need to consider this a lot harder, and the AEMC needs to consider it a lot harder. The trouble is, in this current environment, where you and I and everyone else that owns an EV are going around having a quiet chuckle to ourselves, and, how many notes have we written about $40 billion of oil imports and oil's a security risk? I must say I thought it would be someone trying to cut off oil supply to Australia directly rather than just choking off the whole world, but same scoreline.
Yeah, that's interesting. And just in those sort of regulated networks and regulated returns, I mean, I think the gas network is actually proving a bit of a
salutary lesson.
Yes, exactly, because I think the regulators decided they're not going to let the consumers be holding the boot for this. So someone's going to have to take the risk. It might be governments or whatever, but I think that's where the networks see their risk, is that, if network costs are so expensive that batteries are a cheaper battery than the grid, then they've got an issue. And you talk about productivity. Well, I think that's exactly what they're trying to fill by creating this sort of flexibility, because they've got a lot of spare capacity on the grid. So it's just a matter of actually using.
Why have they got spare capacity in the networks? It's because it's been used less, right? And that's what all these home batteries.
Because networks are being built for sort of peak demand, and there's a lot of times when there's not peak demand with their spare capacity.
Well, that was always true, but now on the average throughput is I think going to struggle to actually increase because all these. I mean, you have a home battery. Do you use the grid more or less?
Well, I don't import anything from the grid anymore.
No, and you don't export that much either, do you?
Well, I do, but I don't get anything for it.
No.
It doesn't cover the cost of my connection, but that's because I got a lousy retailer at the moment.
That's right. So you really wouldn't care if you didn't have, if you weren't exporting, right? I mean, it wouldn't make any financial difference.
If I wasn't exporting, no. But I haven't been through. Look, to be fair, I haven't been through winter yet, so
No, none of us have been. Well, winter's one thing, but my point remains that for every household that puts in a battery, they will use the network on average through the year less. So the networks. So the only way that can work if the networks get a fixed amount of revenue is if they charge you more somehow or other, or charge someone more for the actual cost of being connected.
Yes, or they come up with this new system which is based around flexibility, which means that they can import and use more imports and exports from the households because they encourage those people with batteries to do that at certain times and get the reward for it. So it's really just about sort of they understand.
They don't have it. They don't have any relationship with those customers.
Well, that's part of the problem.
Yes, but
well, that's part of the problem, and that's why they're doing trials here with the retailers. So it's a matter of they are forced to go to the retailers to try and come up with these tariffs and these plans to try and make that interesting. Meanwhile, you got a whole bunch of people also trying to keep them in their sandpit and not allow them to do all their sort of, these ring fencing exemptions and things like that. So it's a bit of a cluster F in terms of trying to get things. And I think people are just trying to sort through it. I find it really interesting, but I don't know what the answer is.
Well, Giles, we've gone on for a long time.
It's a really interesting thing, and there's going to be a whole bunch of reports coming this year just on the role of CER. AEMO is probably going to have to, Matt Keane was talking today about AEMO is probably going to have to redo its ISP quite significantly in light of the home battery scheme. Its predictions for 2030 levels of home battery storage have already been exceeded, and we're only in 2026. We've got to get cracking on these CER roadmaps. Race for 230 is holding a special conference in June on this. So there's a lot of thought going in here, and there's a lot of people just realizing now that I know, there is no transition without transmission, but basically there's not going to be any transition without the customer as well. So I think there's two things we've got to work on.
At the end of the very, very end of the day, households are only responsible at best for about 35-40% of consumption, right? The rest of everyone else has to be thought of as well. But Giles, there's so much to do, and we get a lot of what we used to say in investment banking research. It was paralysis by analysis. We need to actually get out there and start putting some shovels on the ground.
Yeah, absolutely. Look, I think we've enjoyed ourselves today. Hopefully our listeners have enjoyed themselves. Thank you very much to Jeff Monday from Fluence for doing the podcast interview not once but twice. Thanks also to Adam Cameron from SAPN for also joining us. Thanks, of course, to our sponsors, Pylon and Evergen. Thanks for everyone out there listening. Thanks for all the positive feedback I got at EN26 from people who love listening to our podcasts. And we'll be back again next week.
Yes. We're going on sale in chemists. There's a sleeping pill fairly soon, I think.
What was I going to say? We're going to be back next week. That's it for now. Goodbye.
Energy Insiders was brought to you by Evergen, the market-leading renewable energy software business that optimises residential and commercial solar and battery systems. Evergen enables large numbers of systems to operate as a single fleet, so network operators can use them as a virtual power plant, generating significant value for consumers, network operators, and the energy system as a whole. Evergen software is powering the energy system of the future. Energy Insiders was also brought to you by Pylon. Pylon provides easy-to-use solar design software for installers and retailers with pay-as-you-go pricing, no monthly cost and no lock-in contracts. Join Australia's top solar companies who trust Pylon to design high-resolution, CEC-ready solar proposals.